So today I'm going to talk about the crazy few days in the stock market. Well, it's been a crazy few weeks as stocks are absolutely flying. So I thought today, especially with it being a Friday, would be a really good day to kind of stand back and recap where we currently are and what to expect from the stock market going forward. So I hope you enjoyed the video. If you could smash that like button, especially for being one of those YouTubers that didn't disappear off the YouTube scene when we were in that bear market. I stuck here all the way through that bear market, making videos, saying that we'll make it out the other side. So please hit that like button, and if you're new around here, subscribe and we'll get started. So if you look at the S&P now, up 9% year to date. Unbelievable. I can't think of anyone that was saying the S&P was going to go up 9% at the start of 2023. All I heard was it's going to be a tough few months, and then towards the back end of the year we might see some hope then, but nobody was predicting this run. Up 9% year to date. We're above the average return nearly in the S&P 500 in 1 month. And the positive thing is that normally when we do have a good January, we do normally end up positive for the year more than often, so that's a little bit of a positive fact there for you. But when you look at some individual stocks where the S&P is up 9%, look at what happened to these individual stocks. You got S4 Capital absolutely tearing it in the last few days. Look at Meta, 51% year to date now after that jump yesterday. Unbelievable. Tesla, 74% up year to date. Unbelievable. You know, everyone was talking how negative was this stock before we came into this year. Absolutely amazing. The King is back, 56% up year to date. Good run from the King. We've got HIMS, 31% year up today. I still think this is way too low for this company. It's been disrespected for too long. Look at Shopify, 50% year to date. Unbelievable runs in these companies, and you're seeing here where the S&P is up 9%. All these beating down stocks that are absolutely exploding now that we have a bit of positivity. And it's no shock that when we have all these stocks really compressed and we have a little bit of positivity and the S&P moves up a couple of percent, that these stocks move up massive. You know, it works both ways. People forgot that when the S&P was going down, these stocks are going to get dragged down more than S&P 500. And people forgot that when it goes in the positive direction, the exact same happens. So it's no shock there. But if you listen to the people that were really negative in the last few months, or all the bears out there, they wouldn't have been saying that. So well done for you guys that realise that happens in the stock market. So we're on a crazy rally. It's been a fantastic January. What has to happen for it to continue, or is it going to continue? Well, ultimately, the big change has been since this time frame. October 2022, that is when we saw a lot of stocks carry on going lower and lower. We talked about Meta, for example, yesterday in the video. We talked about that's where on the back end of October when that stock hit $88, for example, and now it's up double since that time frame. That was the month really where we saw the last kind of push down in a lot of stocks. And then through November, December, we did okay. And then obviously January really pushed us up. So the big change has been from October 2022. So what changed for us to go on more of a positive run? First of all is inflation. If you look at inflation until October was coming down. It did peak. But the problem with inflation, it was only coming down 0 point something % every month. October was the big change. October was when inflation started dropping rapidly. And that's a big thing that's really helped the stock market in the last few months, is the realization of, okay, inflation is actually rapidly coming down. It's not only slowly coming down as it was doing previously through the summer. When you look now at inflation, it's a rapid descent. And that's what a lot of people didn't predict to happen. A lot of people did not predict inflation to come down that quick. And then what's that's done? That's then gone to the Fed and interest rates. And the UK is basically following the US. It's basically looking going, oh, the US inflation is rapidly coming down. The same could happen to us. And also, oh, if the Fed reacted positively to that, that's probably going to happen to us. It's having a knock-on effect. It's just the UK is behind the US. And that knock-on effect to the Fed and inflation now has the Fed starting to be a little bit more dovish than what it has been previously. We're starting to see the mention of thinking about we've got to wait for the next bit of data. They're still hinting at interest rate hikes, but not at all costs like they were doing before. And the thing is the Fed are going to be staring at the inflation, and if the inflation keeps coming down, interest rates are going to slow down. And we've gone from a point of view where people thought interest rate hikes were going to continue way up to the summer, and a lot of people are now starting to factor in, okay, we might get one more increase in March, and that might be it. So that's a big thing, is that when you look at what the market's pricing in now, it's pricing in inflation to continue rapidly go down. It's pricing in the Fed to only probably do one more interest rate hike, maybe a 0.1 interest rate hike. So the big thing is inflation and the Fed. If they follow that pattern, that's going to be key. If they break the pattern and they actually are a little bit more aggressive, that potentially could hurt the rally. So that's probably a key point, but that's been one of the changes. Next thing is the economy. What did we hear about the economy in October 2022? We're entering a recession. There's going to be a recession. You heard a few people saying it's going to be as bad as the 08 recession. But when you look at the economy now, the economy is still doing okay, and people are not expecting the economy to hold up as much as what it has been doing. And that's really what also has affected a lot of the stocks and the rally out here at the moment. Now, one big concern that I have is that we are starting to see now a lot of companies starting to cut jobs. And my biggest concern, as I've always said on the YouTube channel, is jobs. Jobs, we need people to stay in employment, otherwise that's where we do start having problems. And what we're seeing at the moment is starting to see a few companies starting to lay off quite a few members of their staff. So at the moment it's not an issue, but that's something that I'm continuously watching. And if it carries on going this rate, then don't be too surprised if in a few months' time we have done really well and then all of a sudden people go, oh, we've got a problem with jobs. And the realization of, oh, it's because of all the jobs that they were losing a few months ago. So that's only the little thing that I'm concerned about, but the economy's held up better than what everyone else thought, and that's obviously one thing that really helped. China. I think at the start of the year I did my predictions for the stock market this year, where I said I think the stock market will return 10 to 15% this year. On there I think I mentioned that Chinese stocks will do very well, but I didn't expect the Chinese economy to open up as rapidly as what it has done. Everyone didn't really have this on the cards, but now that China's opening up, it's a major economy, and if you have a major economy like China playing ball, that's obviously going to help the world economy and a lot of other stocks that operate in China or potentially get supplies from China. And that big change at the start of January, where they basically went, yeah, we're basically going to start opening up again, and that's going to massively help as well. And that's a big change that we've had that has also helped the stock market recently. Oil and Russia. So oil went sky high in 2021, 2022. Commodities have really come down, oil has really come down, and the Russia situation that really impacted inflation and commodity prices in 2021 and 2022, you're seeing this really not having that much impact now. Russia's revenue on companies are overlapping now. Oil has come down. A lot of countries have sourced oil from other places now. So this big pressure that was on in 2021, 2022, has massively gone out, and all the hard comps from anyone that's lost revenue from Russia, the hard comps from that have basically come out now. So this is another big impact that's happening on this year going forward. So overall, what's next for a lot of these stocks? Well, as I always say, short term, no one knows what's going to happen. So me saying this right now, anything can happen in the stock market. For example, no one predicted us to have an absolute crazy January, and look what happened. And quite often, whatever you think is going to happen, the opposite always happens. But my feeling is that if inflation carries on rapidly coming down, obviously very positive. Next time the Fed meet, if inflation has rapidly come down, they should come in with positive news of once again slowing the rate hikes down. So that's very, very key. The economy still needs to hold up, which it seems to be doing. I'm a little bit wary about the job losses, but at the moment it's still doing okay. China needs to stay open, which it looks like it's doing. Commodities need to stay low to help inflation. Once again, that seems to be happening. So at the moment, everything seems okay, but there's still a few things that could potentially go wrong and take us by surprise. So we need to be keeping an eye on them. But at the moment, it looks okay. Now, saying that, I think the rally is deserved, but we've just got to be careful that we don't go too extreme. But when you do look at why we have had such a bounce, is because stocks were getting valued at the lowest valuations ever. You had the 08, it's going to be an 08 recession fear out there, and that was never going to happen. So you can always say that stocks realistically just got to way stupid prices, and they did. The only issue now is that we don't go too crazy to the other side, and that's probably the only issue that we have right now. I think we deserve the rally, but we don't go too quick up on the uptrend. But ultimately for me right now is that it's probably a time where I'm probably going to slow my buying down slightly now and try get a bit of a cash pile, which hasn't basically existed for the last 6 months because I've just been buying stocks really heavy. So I probably will still buy a few stocks, but I won't be just everything in that I've been doing the last few months, like everything into the stock market that I can. So there probably will be a bit of a slowdown. And from my point of view here really is that, let's say there's two ways we go. If we carry on going up, fair enough, I make good amounts of money in the stock market, I'm happy. Let's say that we do go down from here and we go back lower, Fair enough, I get to buy more stocks back at cheap prices again, and we've seen what happens very quickly when we buy at them sort of cheap prices. So either way, if we do go up, I'm going to be happy. If we go down, I'll be happy because I have more opportunities. So overall, what I just want to finish off with is that buying the dip. I just want us to finish off by saying, well done to anyone that did buy the dip, because in the last few months you've probably seen some rewards in some of the stocks that you've been buying or dollar cost averaging, and it's been a reality check of this is what happens in a 10% jump in the S&P 500. This is what happens when you buy them stocks. And the crazy thing is now that this is only a 10% rally in the S&P 500. We're not even anywhere near all-time highs. You know, we've got another 10% on the S&P 500 before we get to all-time highs. So if you double up what we've just had once again, you're going to be doing very well. So we've still got a long way to go to all-time highs, and you imagine when that happens how well you are going to do from that situation. And that's what I would say. The other thing is this rally that we've had, this is only a 10% rally as well. You know, when you look at the average bull market, I think the average bull market is something like 200-300% return. So you imagine you multiply this by what the average bull run is when we get into a bull market once again, you're going to be absolutely laughing from the opportunities that you buy. So it's good to see some people finally getting a little bit of a treat or a reward from buying the dip and seed. It's, you know, when you've been beaten down for so long, which has been over a year, nearly 2 years of that negativity, to actually see some positivity, it's a bit of a reality check of, oh, this is what happens when stocks go up. You know, they can go up, you know, really aggressive, and I think it's good for the people that have stuck it through to see a little bit of green and a bit of a reminder of what happens in bull markets. And it's probably a deserved break for any of you guys that are here that made it through the other side. You know, it's been a tough time. You know, a lot of, if you remember 2-3 years ago, there was a lot of people that said, oh yeah, if there was a bear market, I'd absolutely love it. I'd buy all the stocks, you know, or imagine the CV dip, but it was for a long period of time and I get to buy stocks for a long time. I'd absolutely love it. And then we got to the bear market and look at the amount of YouTubers that quit. The retail investors, I would say that probably half, I would say the YouTube retail investors quit in the last few months because they, you know, just went, oh, this is way too much for me, and left the market. There's so many people that backed out of the market, and it has been tough. You know, it's a big mental test. And the big thing is for the guys that have stuck through it, at some point you will see the rewards. And this last few weeks has been, you know, evidence of that. But then you multiply that over the longer term and the rewards do really come in. And you deserve it if you stuck it through. You know, it's been a really tough time. The amount of negative, you know, bears that are out there, the negative people in the comment sections of videos that you would have seen, and it's been a tough time. But if you made it through this last few weeks, you've had a bit of a taste of reward of this is what also happens from sticking through them tough times. And like I said, even if we had a stock market that goes down from here, this is a taster. It's a taster of what a 10% rally does. When you factor in a bull market is this 20 times over in over a few years, that's what you've got to remember, and that's why it's key to be in there for the long term. So I hope you enjoyed the video anyway, guys. Smash the like button, you're around here, subscribe. If you do want to join Trading 212 and get a free share worth £100, join through the link in the description. And if you want to see some more exclusive content from me, join the Patreon. But apart from that, catch you in a bit.